Good morning, everyone. This is Todd Brow with Senior Insurance Marketing, and we are excited to have Andy with Washington National here on our webinar today. And Andy's going to be talking to you about their great products that they have, especially for this time of year, selling some of the ancillary products to your clients. And so he's going to talk to you more about Washington National and their product portfolio that they have. So without further ado, I'm going to swing it over to Andy. Andy?
All right, Ty, I appreciate it. Thank you for allowing us to get some time this morning in front of your team of agents. We really appreciate it. And so, yes, we want to take some time this morning to let you all know about a new hospital plan that we have here at Washington National. And so we'll take about 20 minutes to go over that product. Very, very simple plan design, which I know is always nice to hear. And so with that being said, we'll kind of cover that hospital plan. And then I think we'll take the rest of the time to cover two additional products I think that will work very well, whether you service the senior market or you work with all underage folks in the group health or whatever market you serve. I think we have a product that can fit your niche. So with that being said, let me go ahead and dive in to our hospital plan. And so one thing I'll tell you here is that if you're not already contracted with Washington National, please get in touch with Dina and or Nikki and get your contract into us. We do have an incentive that we're going to roll out to all brand new agents, so we'll talk about that at the very end. But anyway, again, hospital sure is what we'll start with here. This plan just rolled out in November of last year, and so November 19th to be exact. And so we actually did over $1 million in sales in just this product in the month of December. So it was a quick rollout. The field took to it very well, and again, I think it's a nice plan regardless of what market you serve. So the initial little information about this issue age is 18 to 69. Why is that important? Well, our old hospital plan, for those of you that may have sold that in the past, it was called Hospital Secure. That plan ended at age 65. No ifs, ands, or buts about it. So the fact that this plan goes up to age 69 at issue, and it's also guaranteed renewable for life, is huge. So again, for those that sell in the senior market, this is a great product. As a matter of fact, for those that sell Medicare Advantage plans, we've gotten some nice traction thus far in senior agencies that sell the $1,000 benefit, which that'll make a little more sense here in a second, but it's still the lowest amount available. And for those anywhere from 65 to 69 years old, it's about a $50 a month product, so it fits really nicely and help cover some co-pays and some out-of-pocket costs associated with those Med Advantage plans. So kind of keep that in mind as we go through this product here. But there's an HSA compatible to non-HSA compatible version, meaning that for those of your clients that do have an HSA or a health savings account already in place, you would sell those folks the HSA compatible version. And for anyone that does not have an HSA currently in place, you could sell either option. So, and personally, I think the non-HSA version is going to be the more popular of the two. But I'll go over both versions for you, kind of show you the little differences, which they're very similar in all actuality. Guaranteed renewable for life, I already kind of mentioned that. They keep issue age rates for life as well. And I will tell you that the first issue age is 18 to 49. So a lot of our old products that were issue age band, 18 to 39 was typically that first band. So with this product, again, a 49-year-old pays the same rate as an 18-year-old. Additionally, with that in mind, with regards to the rates, if you're selling to, say, a husband and wife, you can always use that younger spouse as the primary insured. So that'll save them a little bit on rate as well. We're always going to go off the primary insured as far as what we use for the issue age. For those that sell on the work site, this product can be sold guaranteed issue. So I'll go over that in a little bit more detail here in a moment. Obviously available for both work site and direct sales. Rates are the same for the base plan. So again, for those that sell in the direct market, it's a great marketing tool in the fact that, there's a lot of carriers out there that'll sell a product like this. You're going to pay a much higher rate for a direct sale than you would through your employer group. So again, those that sell in the direct market specifically, that's a great selling tool. Last two little things here. We cover normal pregnancy with a 10-month waiting period. The more and more people I talk to, they're having a harder and harder time finding a hospital plan out there that covers normal pregnancy. And so, again, this is going to be a great product to use in the underage market for those that are looking to start a family. Just keep in mind, again, 10-month waiting period on delivery. And no tobacco rates. Again, big selling point there. So again, if you kind of think about that, a 49-year-old tobacco user pays the same rate as an 18-year-old non-tobacco user, if you kind of want to think of it that way. All right, so we're going to get into the 4 plan designs, and I'm going to bring this up a couple times, and I want to really drive this home because I don't want this to be confusing to you at all. But basically you have 4 plans. All right, you've got 1H and 2H, and the easiest way to think about that, the H constitutes the HSA compatible version. All right, and then you've got plans 3 and 4, which are the non-HSA plans. The only difference between 1 and 2 and 3 and 4, you can see that the options 1 and 3 are guaranteed issue, only available for worksite sales. All right, so for those selling in the direct market, plans 2H and 4 are the only ones you'll utilize. Again, for those selling in the worksite arena, you potentially could offer this plan at guaranteed issue, which again, I'll go over the participation requirements for that here in a minute. All right, so again, that's the only reason I really wanted to kind of bring out this slide here, is just to make sure that 1H, 2H, 3, and 4, kind of made sense, the difference between those plans. All right, so let's look at the non-HSA compatible option, which I think personally is going to probably be the more popular option. And so again, this would be for folks who do not currently have a health savings account in place. So they're going to first choose their lump sum. So we're going to pay anywhere from $1,000 to $5,000 for that initial hospital confinement. You can see they're admitted, confined for 23 hours or more. That benefit is payable once per year per individual that's covered under the policy. So you may sell this as a family plan where you're covering a primary, a spouse, and 3 kids. Each of those 5 individuals on the plan will each have their own lump sum bucket per se. All right, so that part of it's pretty easy. Our thinking there is pair that up. Say you get a $5,000 out-of-pocket deductible on their health plan. Pair up that $5,000 amount. Hey, you get hospitalized at any point throughout the year. Your Washington National Hospital policy is going to cover that out-of-pocket deductible, and everything else over and above, would hopefully be covered by their health plan. I mentioned in the Med Advantage sale, again, what we're getting some traction is some senior agencies that we already work with are selling that $1,000 lump sum confinement benefits. They're not going over the top. They're just doing the base $1,000 lump sum, again, which helps cover any holes they may have in that Med Advantage plan. And again, for a 65-year-old, that $1,000 benefit's about $56 a month. All right. Additionally, the base plan comes with a hospital outpatient, so it's $100 per day, 2 days per calendar year per individual. ER benefit, I think this is huge. It's 2 per year per calendar year per individual. You can see here that emergency room also covers trips to the urgent care. So again, that underage market, you got folks that are younger that have young kids. They're taking those children, you think, at least to the urgent care once or twice a year for. That could be for an earache or sprained ankle, whatever the case may be. They go to the urgent care, they're getting paid $100. All right, and then lastly here on the base plan, you can see we've got a rehab facility at $100 per day. That's 15 days per confinement, 30 per calendar year. And there's a waiver of premium that's already included in the policy. So if they're confined to the hospital for at least 30 days, we'll waive the premium beginning on that 31st day for up to 12 months. All right, and again, that's already included in the base plan. All right, so base plan, again, pretty simple, right? You've got your lump sum confinement, your outpatient hospital, your emergency room benefit, your rehab facility benefit, and waiver of premium. That's it. All right, so on this HSA product, you've got a couple riders that the client can add, one being a wellness and diagnostic rider. So $25 per day for a regular physician's office visit, which would include their annual physical. All right, you can see there are some limitations down there towards the bottom. You can see individual coverage, they get 3 of those per calendar year. Family coverage, you get up to 6 total for the family per calendar year. Lab tests and x-rays, imaging exams, diagnostic exams, again, those are all included here within this rider. This rider is very inexpensive. We'll look at the rates here in just a second, but again, this rider is only available in the non-HSA version. And then you've got a second rider on the non-HSA plan called the supplemental benefits rider. So really just the easiest way to think about this rider here is it's really just enhancing the base coverage. For instance, you can see we increased the daily hospital confinement benefit. I believe it was $100 on the first policy. Actually, that was outpatient. But on this one, it would enhance or basically pay an additional daily benefit on top, over and above that initial lump sum. You've got some ICU coverage here, additional outpatient benefits. So again, that would be in addition to the $100 outpatient on the base plan. And then lastly here, additional rehab facility benefit. You got a surgical procedure, which the surgical procedure is basically a schedule, anywhere from $100 to $1,000. And that's based on current surgical tables. So that's something where it could kind of be a changing thing each and every year. It's really based on, I can't remember the exact, I should know this, but I can't remember the exact chart that they utilize for that, but it's pretty standard in all actuality. And then ambulance benefit as well here on this rider. All right, so again, base plan, you get 2 additional riders you could add on this non-HSA version. Let's look at some rates here real quickly. So this is for the $3,000 benefit, so the lump sum. You can see anywhere 18 to 49. Individually, you're looking at about $45 a month, up to $95 a month for family coverage. And of course, I know it's a little bit tough to see. It's a little bit small, but you can see the different age bands there. Again, issue age rates. And then the wellness and diagnostic rider, again, 18 to 49, about $15 a month for an individual. And remember they're getting $25 just to go get their physical, up to 3 per year for an individual, in addition to some of the diagnostic exams that are covered as well. So, and then you got a supplemental benefits rider, which, again, I didn't mention on the supplemental benefits. You probably saw there was options 1, 2, and 3 on that, just kind of a stair step as far as option 3 would be the higher benefit amounts. All right, and you actually can quote this. So once you become contract with Washington National, have access to something called BizLink, which is our agent portal, online agent portal, which gives you access to commission statements, materials, online quoting, which actually we're looking at an online quote right here, and that's kind of what it would look like. And then, of course, your enrollment platform as well. So with any of the products we're going to look at, and I'm just kind of jumping across here, but any of these products we're looking at, you can enroll these online or on paper. So if you want to go the paper route, certainly have that available. Again, we can enroll these online as well. Let's look at that $5,000 benefit. So this is going to max, we're looking at a max situation here, but look at family coverage, $154 a month. And while that may sound on the surface as being kind of pricey, think about the fact that if you've got a primary insured, a spouse, and again, 2 or 3 kids, that's 5 people in the family that all have a $5,000 hospital benefit. So just one of them get hospitalized throughout the course of the year. Again, you're hoping you're going to cover that max out-of-pocket deductible, and again, health insurance is going to kick in after that. So that's really the thought process behind this product. But again, I think $150 a month for a family for that max amount is actually very affordable. All right, so let's look at the HSA version now, all right? So we looked at the non-HSA, which I think, again, is going to be more popular of the 2 options. Here's the HSA compatible, and it couldn't be simpler. So no riders on the HSA compatible plan. You still got your base lump sum confinement of anywhere from $1,000 to $5,000 per calendar year per individual. And this one has a daily inpatient hospital confinement of $100 per day, and that is payable day 1. So you'd add that $100 to whatever lump sum they've selected, and of course, days 2 through however long they're there would be an additional $100. The thought process, again, behind the HSA compatible plan is it can only cover inpatient type benefits. So that's the main difference you're going to see here. No outpatient, but again, daily inpatient of $100. You've also got an ICU benefit. It's actually an additional $50 per day, but we figure if you're in the ICU, you're already in the hospital. So you're getting your $100 from the hospital daily, then you're getting your additional $50 for being in the ICU. So otherwise, just the waiver of premium benefits, the only other thing here. It works the exact same as we saw in the non-HSA version. All right, so again, HSA compatible version, very, very, very simple plan design, no riders, kind of take it or leave it type deal there. The rates, we're looking at the $3,000 to $5,000 benefits. Actually, the rates are very similar to the non-HSA plan. I think where you're really going to differ is obviously when you add the riders to the non-HSA version, but the base plans themselves are very similar. So I think we were looking at about $151 a month on the non-HSA version for family for the $5,000. You can see here's $154 for the HSA version. So again, base plan pretty similar. I'm not going to harp on these because I want to get through all the 3 products, but we do have return of premium rider available in most states. I think hopefully most of you are familiar with return of premium, kind of how that works. Basically, we're paying all the premiums back minus claims incurred at maturity periods determined on how old they were when the policy was taken out. That will increase the rate typically by about 40%, so kind of keep that in mind. I'll tell you, we have agencies out there that will sell all of our products with return of premium, no questions asked. It's just kind of built into the rate. So, if you want to go that route, certainly check your state availability based on where you're located, but typically return of premium or cash value will be available in your state, which cash value actually works the exact same way as return of premium. The only difference is the maturity period is always set at 25 years. And with the cash value rider, they can actually, beginning policy year 6, if they were to cancel their policy, they can actually get a portion of their premiums back, again, minus claims. So, again, I don't want to harp on those two, but if you're an agent that likes to add the return premium rider, certainly check your state availability and know that it is available in most states. Iowa excluded. I will tell you, Iowa does not have either option. Here's our current state availability chart for this product. Again, it rolled out in November of last year, so it's been available for a couple months now. We do have another set of states set to roll out in April. So, and our next rollout does include Texas. It also includes Pennsylvania, and it also includes Missouri. So those are the three I know for sure. I think Idaho might be in there as well, but those are the three I know that are kind of focused in the middle states where most of you all reside. But again, if your state is not highlighted here, just know that we have filed this product in all states. I think the only state that's come back so far and said no is Montana. And so with that, again, most all other states here hopefully will have available here, if not April, here sometime in the course year of 2019. All right, just to finish up this product, again, some of these we've already kind of talked about, but issue ages, again, 18 to 69. Coverage options, this is pretty standard, and all three products we talk about today are going to have the exact same options with regards to, you got individual coverage, you can do individual plus spouse, you can do single parent or family. This product does cover kids to age 26 regardless of school status. And actually, I think all three products we're going to talk about here today fall in that exact same boat. And I know it's in addition to regardless of school status, so I know they have to be unmarried and don't already have their own hospital or accident or active care product. So if you have any questions on that, obviously you can give us a call and kind of confirm what they are eligible to apply for. But 30-day waiting period. So this is pretty standard across the industry. Once the policy goes into effect, so let's say it goes into effect on February 1st, they cannot claim within that first 30 days, which again I think is pretty standard with most hospital products and or critical illness plans. It just excludes us from those folks that think they have something. They go out and they get our hospital plan. Or, they're pregnant. They're 8 months pregnant. They go out and get our hospital plan and decide that, they want to try to get paid on that within a couple of months. That's kind of why we put that in place. So, again, that's pretty standard. Otherwise, all right, so underwriting, so there's I believe there's 8 health questions all told. There is a height weight chart on this. If you write this product electronically, the height weight chart will already be built in to our platform for you, so it'll tell you if they don't qualify. If you are one that likes to write on paper only, be sure you check out the agent guide. I would actually have or suggest having a copy of that available for yourself, via PDF or whatever, or if you order a hard copy, so you have that build chart in there for you. Otherwise, it's answer no, it's a go. Right? So there's no script check, no MIB checks, no personal history interviews or family history questions. They simply answer those 8 questions as no. They qualify for coverage. If they do answer yes, they are ineligible. So take a look at those health questions. And again, I had to mention, we base this product kind of on the group Aflac plan. And so with that being said, they're very similar products. The main advantage to ours, obviously, we can sell in the direct market. But the health questions are very similar to what you're going to see with all carriers. Again, so you can take a look at those. If you have a writing number already, feel free to get onto BizLink and kind of either go through an app or check those out. But all told, last thing, GI. So for worksite sales, GI, the participation we need is the greater of 3 lives or 10%, which is huge. I mean, the easiest way to think about that is 30 lives or less, you need 3 to get GI. 31 lives or more, you need 10%. With that being said, you can go up to $3,000 lump sum for guaranteed issue. And so, if you're selling at a work site of 25 people and you can't get 3 to sign up, then it's probably a greater problem you might want to look for another industry. But again, 3 lives or 10% is huge. That's by far and away our lowest participation requirement needed for GI on any of our products. So anyway, so with that being said, if you have any questions on this hospital plan, if you don't mind, please save them until the end. I'm going to go ahead and talk about a couple other products, and then we'll take any questions that you may have. And so,
Andy.
yeah.
Andy,
Yeah.
if you have any questions, you can also type it in the Q&A box as well, too, and then at the end we can answer those questions in the Q&A box, too.
Yep, perfect. Sounds good. All right, cool. So I'm going to go into a lump sum critical illness plan for you all now. And so a lot like the product we just looked at, this plan is called Active Care. Can be sold in the senior market or the underage market, either or. I think there's a fit. Issue age is 18 to 85 on this plan in most states. Like I know California is kind of wacky. I think 64 is the max issue age out there. So definitely check your state variations as far as that issue age goes. But I think, again, most states 18 to 85. Again, this plan is guaranteed renewable for life as well with issue age rates, just like we saw in that hospital product. Benefits do not decrease with age on any of our plans. We like to say answer no, it's a go. So similar underwriting here on this Active Care product. I will tell you on the Active Care, so this lump sum CI plan, we do run a script check in one of 2 scenarios. Either 1, the client is 65 or older, or 2, they apply for $60,000 or more in lump sum. And that's probably a pretty rare instance that most people apply for that $5,000, $10,000, $20,000 lump sum. But again, for those that still in the senior market, you could run into or I know you'll run into a script check for 65 or older. 5-year look back here on this product as far as the questions go. Yeah, I tell you what, I'm going to go ahead and just get into it here. So basically, again, family members to be covered, exact same as we saw in the hospital plan. This one, again, lump sum critical illness. So the client can do cancer only. They can cover themselves for heart attack, stroke only, or they can do a combination plan. What we love about this product is the fact they do a combination plan. Everyone covered under the policy has their own separate cancer bucket and their own separate heart stroke bucket. All right. Lump sum amounts on this one go from 5 to 100,000. Check your state availability again. Most states again start at 5. There's a few states, and I can't remember off the top of my head which those are, but I know there's a couple that start at 10,000. But again, same thought process on this plan as we saw in the hospital, right? Hospital plan, your pitch was, hey, if you're hospitalized for any reason over the course of the next, however long, we're going to pay out your lump sum amount. It's going to help offset that out-of-pocket deductible. Again, same concept here, except we're talking more specifically about, cancer or heart attack, stroke, or there's actually a couple additional things we could cover as well in these riders, which I'll go over with you here in a second. All right, so what does the cancer bucket, what all is included there? Well, of course, your lump sum, so payable upon diagnosis of internal cancer, $5 to $100,000. Carcinoma in situ is paid at a partial benefit, which is kind of nice, actually. So it's not a full-blown cancer. We would pay 25% of whatever lump sum they've selected. So I'll use that $10,000 example as we kind of go through this. But again, with that, you get a $10,000 cancer plan. Somebody gets carcinoma in situ. We pay them out $2,500. That individual then still has $7,500 left within their cancer bucket. If they were to get another carcinoma in situ at a later date, and/or they were going to get a full-blown cancer diagnosis at a later date. Skin cancer benefits include this, $300. It's a one-time payable for diagnosis of skin cancer. Now, with that being said, skin cancer isn't paid at the full lump sum. However, if someone got diagnosed with skin cancer and let it go untreated and it did have to go internal, at that point, of course, they get their full-bore lump sum as well. The base cancer plan also includes an annual care benefit, kind of a drop in the bucket, in my opinion, but $75 per year after they're diagnosed. That's payable for 5 years just to kind of go in and get their follow-up visits. Hospital stay benefit I do love, and the fact that it's $300 per day if they're confined to a hospital. And these benefits do not coordinate amongst each other. So if you sold someone an active care policy and the hospital assure product, they would get paid over and above. Both plans would pay as they say they're going to pay. Again, we don't coordinate and/or not pay on one or the other. And then I think the most important part of this product is the recurrence benefit. The fact that if they're diagnosed, of course we'll pay whatever lump sum they applied for. However, you can see there's a chart here. Once they're treatment free, with regards to cancer, we're thinking once they're done with the radiation and chemo, that clock starts. And you can see here month 13, it goes up to 10% of the original lump sum all the way up to 50% at year 5. So a couple of reasons it's important. For one, cancer unfortunately is something that can recur. I think we're all well aware of that. The second one, this is going to help with your persistency. All right, so there's no reason for the client to drop the coverage necessarily. If they want to continue that coverage on, of course, they'll continue to receive the benefits, and you'll continue to receive your renewal commission. All right, so that's the cancer-based bucket. One of the riders, real quick, I'll just briefly mention is the radiation and chemo rider. I mention that because this is only available if the client chooses the cancer coverage, which makes sense. But it's payable at $200 per day for radiation and/or chemo, up to $5,000 per year, no lifetime maximum. And so, essentially what you're doing here, if they're diagnosed with cancer, that's 25 treatments. They're more than likely going to go through 25 treatments. It's kind of the way things are. And so with that, you're really, in a sense, kind of just adding an additional $5,000 onto the lump sum. A very inexpensive rider. I think I have a rate example. We'll take a look at those here in a minute. All right, so we've covered the cancer-based bucket. Now the heart-stroke-based bucket, it works the exact same way. As a matter of fact, I love some of the partial benefits on this product. The fact that you can see that we'll pay out the full 100% if they have a heart attack or a full-blown stroke. However, if they have a bypass surgery, we pay at 50%, angio at 25%, stent at 25%, and then TIA or mini stroke at 25% as well. I like this because the client could, in essence, receive their full 100% without ever even having a full-blown heart attack or a stroke. And a lot of these are preventative measures as far as the bypass, angio, and stent. So again, I think that's a nice selling point. But the rest of the base heart stroke works the exact same as we saw in the cancer. $75 annual care benefit, $300 per day hospital stay benefit. And if I didn't mention this, the $300 per day on the hospital stay is limited to 3 days per confinement. But the recurrence then works the exact same way as well. All right, so that's the base plan. You can do, again, cancer only, heart stroke only, or they can do a combo with, include both lump sums. Now we'll look at the riders. The critical conditions rider. All right, so just think about it this way. You can't do the riders until you've done at least one of the bases, right? Either the cancer only, the heart stroke only, or the combo. So the critical conditions rider, the way it works, it's a third lump sum bucket. So whatever base, so say they selected $10,000 for their base plan, that would carry over the critical conditions would be $10,000 as well. So it's payable for a little less common things, but again, just think this rider is very, very inexpensive. Like literally like $2 or $3 a month for an 18 to 39-year-old. So it has blindness, paralysis, coma, organ transplant, major organ transplant. I like how we pay 50% as soon as they go on the organ transplant list. The other 50% is then payable as soon as it's actually the surgery takes place. So I do like that aspect of it. And additionally, we cover 50% for diabetic amputation, Alzheimer's, huge, huge, huge. So I always say, I'm trying to make this quick, but I actually sold myself about 10 years ago. When you always go to these worksite groups and you always ask everybody to raise their hand if they've know somebody that has cancer. And of course the whole room would raise their hand. It's an important selling point. But now you can almost do that same thing with Alzheimer's. It's becoming much more common, it seems, much more talked about. And so with that being said, we like this policy in the fact you can cover themselves for cancer, heart attack, stroke, Alzheimer's, and George Garinger, our sales director, like to say, if you really want to get creative with it, you got C for cancer, A for Alzheimer's, S for stroke, H for heart attack, and that spells cash. So cash back in the client's pocket, and obviously cash in your pocket as well for making the sell. So easy to think of it like that. I will tell you too, I love the fact that we do not ask a diabetes question on the base heart stroke. A lot of carriers, and even ourselves on one of our older lump sum products, diabetes was a knockout for heart stroke coverage. It just was. We've actually moved that question over to the critical conditions rider just simply because of the diabetic amputation. So again, if they have diabetes, this is certainly a product you want to talk about with them because one, they qualify, and two, unfortunately, diabetes can lead to some heart problems if they're not taking care of themselves over and above kind of getting that treated. So all right, so otherwise, the critical conditions rider also includes this hospital stay benefit of $300 per day, just like we saw in the base, the two base plans. So if they're hospitalized, do one of those things, it pays at $300, 3 days for confinement. Two more little riders we'll talk about, and we'll finish up with our accident plan. So speaking of accident rider, so we love this product because not only can you offer a lump sum CI product, but you can also add the accident rider. So you can essentially kind of morph a couple different products into one. So as opposed to coming in with 3 or 4 different brochures all spread out over their table, come in with this one active care plan, and typically you can cover their needs with this one product. That's why we like it so much. But the accident upgrade is very similar to our base accident or standalone accident plan. Benefits aren't quite as high, but it's reasonable to think that with a rider. But it's got AD&D coverage up to $50,000. Specified injury benefits up to $1,200. So again, it'll give them a schedule. Hey, for a broken arm, you get X. Dislocated, whatever, you get this. Surgical benefits, same way. It's on a schedule. And then the thing I love about this rider is the ER services includes both ER and urgent care. $250 just for seeking treatment. So we think about that for a minute. And I can tell you, an individual, the accident rider for an individual, I believe, is like about $8 a month. For a family, it's about $15 a month. So think about, you got a family with some young kids out there playing sports on the weekend. Just one trip to urgent care pays them $250, more than pays for what they paid into the rider for the year. 2 trips, well, you're getting way, way, way more than they paid. So we always say, and we have a lot of agents out there too that actually will sell our standalone accident plan, and to the same client, they'll offer the active care with the accident rider. Because again, we don't coordinate, so you're really kind of just stacking your accident coverage for those folks that have kids that get into different troubles and all that, getting hurt and whatnot. All right, hospital rider. I'll keep this one quick. I will tell you that if you work in the senior market predominantly, I don't recommend the hospital rider because it gets a little pricey. But what I do like about this is it pays in addition to the base plan. So I know we had some hospital benefits on the cancer and the heart stroke base. This one pays $200 per day, regular room, and $400 for confinement in ICU. Again, it pays over and above so if they're hospitalized due to cancer and have this rider. Of course, now they're getting $500 per day for regular room and $700 a day for ICU. It would pay in addition to hospital assure products as well. But I like the fact that it covers physician wellness visits at $75 per insured per year. So again, you got a family of 5 that they're all going to get their annual physicals like they should. That's $75 times 5 that we're paying back. So you can kind of deduct that from the premium you're paying for the rider in itself, in a sense. So again, I like this for young families, but hospital rider, if I were to take one part of the product out, if I'm working on a senior sale, I would certainly probably leave the hospital rider out. Again, if you're looking to make it a little cheaper. Cash value and insurance premium riders available just like we saw in the hospital plan. And again, check your state availability on those, but we have both available in most states. Some states will just have one or the other. Let's look real quick. So I'm going to do a quick earnings illustration, and this is based on a 40% first-year commission. Now, that's fairly standard. I mean, but obviously that's something you'll need to talk through with your upline. But again, so let's look at this. Is a 55-year-old non-smoker individual coverage. So this will kind of give us some rate ideas as well. So a $10,000 cancer is about $24 a month. $10,000 of the heart stroke is about $21 a month. The critical conditions rider $5 a month. Radiation chemo rider $640, and accident rider $860. So all told, that total premium is $65 a month or just thereabouts. I would say that's a pretty good price for a 55-year-old. Now, if the same 55-year-old wanted to cover their entire family, you can see it jumps there to about $130 a month. But again, think about it. Everyone in the family gets a $10,000 bucket of cancer, $10,000 bucket of heart stroke, a $10,000 bucket of critical conditions, plus the additional radiation, chemo, and accident rider. So all told, again, little earnings example here is first-year commission, assuming you're getting about 40%, You're getting $310 a month on that sale. You can see there, 1 per week, about 16 grand, 2 per week, about 32,000. All right, just selling this active care. And usually it's as easy as you get done with your health sale. Hey, who do you have your cancer coverage through? Who do you have your heart stroke coverage through? And again, it's a great way to help offset that out-of-pocket deductible you just sold them to. All right, I did another earnings illustration. Again, I'm going to fly through this one, but 39-year-old, just to show you how inexpensive this is for someone in that 18 to 39-year-old age band. Same coverage we just quoted for a 55-year-old is $26 a month total for an individual. And for that family, would be about $55 a month. So again, very, very inexpensive here as far as, especially the younger age bands. But again, you can notice I did not include the hospital rider in either illustration. Again, it gets a little more pricey when you include that. But all right, so to finish up here, same thing, yes or no, health questions. Remember, they do have a script check for 65 or older. I want to definitely focus again on the no diabetes question for heart stroke. I think that's big. So if you have clients out there you know right now that have diabetes and would like some cancer and heart stroke coverage, this is a great product to roll out to them. This product, unlike hospital, does have a tobacco question. Unfortunately, it's a 10-year look back. I don't love that, but it is what it is. So tobacco question would come into play for this particular product, not on the hospital plan. But yeah. So otherwise, let me see if there's anything else here I want to really hit on. Just kind of a benefit summary. This presentation will be up. Senior Insurance Marketing, of course, will post this for you. So anything we didn't get to today, obviously feel free to come back out here and take a look at it. But again, just kind of a summary here of the base benefits as opposed to the riders. And that's really it on the active care product. So I just want to take 5 to 10 minutes here to finish up, and then we'll take some questions from you all on our accident plan. And we all know accident, right? On the supplemental side, accident's probably, if not the #1 selling product, it's probably 1B. And no different here with Washington National. Again, this product is very popular. Again, I think currently accident and active care are 1, 2, at least in my territory, like every year, right neck and neck in total sales. So we get more apps on the accident side because it's a little more inexpensive, obviously. But as far as the total sales, those products go right 1A and 1B for sure. And with the new Hospital Assure product rolling out in late 2018, we're hoping that product jumps up to be maybe the 1C of the group. But I want to mention our accident plan, just because, again, from a benefit to a price perspective, I don't know, personally that you're going to find a hospital plan out there that's going to really crush it as far as either, as far as a lot more benefit and or a lot less rate. And I think there's even some nice advantages to our specific plan that I'll talk about here in a second. But top 10 reasons. So composite rate, this one's issue age 18 to 69, because it kind of follows that same path as the Hospital Assure product. The main difference, though, is against composite rate. It's the same rate for anyone, regardless of how old they are when they take it out. So again, unlike the other two products we saw, no age banding here. Guaranteed renewable for life. Client paid up to $250 for urgent care visits by adding a specific rider, which I'll talk about here in one second. No health questions for the base plan. We do have a disability rider that you can add on the accident plan in worksite only, so through payroll sales only. Personally, not to get too far off topic here, but we have a standalone disability product as well that I'd probably prefer over the rider here on our accident plan, but that's up to you. Of course, you can write any of these products electronically on our OneSource platform. We do take paper apps on all products as well. So, and I will tell you too that when I see the claims here, we can file claims online for our accident plan and direct deposit into the insured's account. Currently, you can do that for any cancer product as well. And I've actually been told that the remainder of our products, like our hospital plan, any heart stroke type coverage, is soon to follow here as far as being able to file online and direct deposit into the account. So as we get updates on the rest of the products, I'll certainly let you know. But just know that most of our claims, at least our most popular claims, can be filed online. All right, so I'll tell you, I usually train off the brochure on this particular product, so forgive me. I will tell you that our brochure on this plan is couldn't make it easier as far as what you're looking at, kind of what you're what you're selling, but two plan levels. So you got Plan 1 and Plan 2, and really they're the exact same with regards to the benefits, are just higher on Plan 2. Typically, commission pays slightly higher on Plan 2 as well. So whenever I'm training on just going off the brochure, I always point out the Plan 2 benefits. And again, the only time I'd ever drop it to level 1 is if someone were to say, from a pricing perspective, or maybe I already bought the active care or the hospital plan, like I don't have a ton of money to spend on the accident, but maybe that'd be an opportunity to go with level 1. But again, I try to always go with level 2. This plan is available pretty much everywhere. If you sell up in the Northeast, there may be some slight limitations up there. But again, everywhere else, we're good to go. If you actually do sell up in the Northeast, we may have an alternative accident plan for you up there. So let us know if that's something you're interested in. All right, so 3 categories come into the product. You got your doctor and hospital indemnity benefits, you got your AD&D, and you got your specified injury. I'm just going to hit the high points on each of those. So the doctor and hospital indemnity benefits, again, level 2 examples. Confinement would pay $500 per day, unlimited. So if they're hospitalized for 10 days, that's $5,000. You will see some carriers out there now that maybe do like a $1,000 admission benefit and a much lower daily confinement. So you just kind of weigh, which option you want to go to. Usually they work out pretty similarly with regards to either it's a daily or it's a little bit higher just admission. ER benefit, $500 for adults, $350 for kids. I can tell you there's a very popular carrier out there, and I won't say the name. Some of you may know. It pays $120 if they go to the ER or the urgent care. We pay $500 for adults, $350 for kids. So now that would be ER for hospital stays. Urgent care is actually paid under the doctor's office visits at $50. However, I already kind of mentioned this. There is a rider that you will add to every single sale called the Physician's Office Additional Benefit Rider that will bolster, I should say, that the urgent care visit from $50 to either $100 or $250. So I will include that rider every time. This is the only time that now you'll ever hear me even call it a rider, because again, we're just going to bake it right into the policy. But I'll tell you about that here in 2 seconds. But again, those are kind of the high points. There's a whole list, 7 additional benefits listed there. Again, they're all laid out really nicely within the brochure. Specified injury benefits, the only thing I'll say about ours that I really like is the fact that, and these are just some, I think it goes up to like $3,600 for a hip. We do not distinguish on the broken bones between open and closed fractures. So you get a lot of carriers out there that will say, all right, for an open fracture, we'll pay $2,000. If it's a closed fracture, we'll pay $500. We, again, don't distinguish between those. So, again, we actually pay what we list we're going to pay regardless of whether it's open or closed. And as a matter of fact, if surgery is required to fix the broken bone, we'll actually pay 150% of what's listed. So, again, the brochure lists out a whole laundry list of different fractures that we pay on, dislocations, surgeries, etc. These are just a couple of the ones that we wanted to put on here. And then the AD&D is very self-explanatory. This is actually a snippet from the brochure itself. So this tells you, dismemberment is what it is. This is the only other benefit that does decrease for kids. It's usually paid at about 25% for kids. But you can see here an accidental death benefit for if it's common carrier, so anything you pay public fare for pays at $150,000 level 2. And then anybody that rides a motorcycle, it's almost like no-brainer. For an individual, about $28 a month and get level 2. For a family, it's about $50 to $52, kind of depending on your state. But again, no-brainer for the motorcycle riders. All right, lastly here, for this office rider, I think the easiest way to look at this is probably just this little chart here, which explains it really well. So again, level 2, we're already paying $50 for urgent care, right? So this example 1, the client goes into urgent care. They fell and hurt their arm. They determine that they get their x-ray and determine there's no fracture. Well, we don't have a benefit on the policy for a bruised arm. And so what we're paying here is we're going to pay $50 for the base plan. And since there was nothing else payable under the policy, we're going to pay an additional $200 just for seeking treatment at the urgent care. So a total of $250. All right. This rider, I would say, is $1.30 a month for an individual, $3.90 a month for a family. And those rates I told you about a second ago, that already included this rider. So I always just include it. So example 2, they hurt their arm, they got their X-ray and told me, you know what, the bone is broken. Well, you get $50 from the plan for seeking treatment at the urgent care. You get $1,600 for your fractured arm, and then you get the additional $50 from the rider. So let's think about it. The easiest way is the rider's either going to pay $50 or $200. It's all depending on if there was anything else payable under the policy. All right, and so our thought process there is, again, is to bolster their urgent care payment to kind of more fall in line with what we're paying for the visit to the ER. We don't want to push people to have to go to the ER. Urgent care is probably a little cheaper for them. Optional riders, I mentioned disability rider. I'm going to kind of go through, skip through these. Just know that if you sell on the payroll, we do have a disability rider that could be added to this product. Let's just quickly look at some rates. So level 1. So here's level 1 rates. Again, I don't recommend level 1, but if you did want to sell level 1 individual, it's about $18.70 a month with that rider. So this is the rider rate right here, that physician's office rider, which we're never going to talk about as being a rider again. A family coverage, it's about what, $36 for family for level 1, including the rider. And in level 2, I told you it's about $28 for an individual, including the rider, and about $52 a month for family. And again, that's pretty much right in line with most other your popular carriers out there in their accident plans. Again, I like ours a little. I just like the fact that we don't distinguish between open and closed fractures. Pay $500 for urgent care and up to $250, or I'm sorry, $500 for ER and up to $250 for urgent care. All right, which are the benefits you're going to claim on the most? All right, so those are the 3 products that I think, again, are going to be obviously our most popular, and then yeah. So I think those are the 3 that probably pair the best with both the underage market and the senior market. Before we take questions here real quick, I'm just going to let you know that we do have a fast start bonus out there for all agents. So anyone that hasn't written a policy with Washington National in the past, let's see here. First app, you're going to get a nice little note from George Garinger, our sales director, along with a $20 Visa gift card. Then upon issue of your 5th app, we're going to bonus you an extra $100 on your commission deposit. Then issue of your 10th app, we'll bonus you another $100, and we'll send you a nice Washington National polo shirt to kind of aid with your sales while you're out there in the field. All right, so that's something that we have going for all agents in their senior insurance marketing. And so again, we'll.
Why would Sarah? Well, because she's nuts. Why would she include Julianne on bullshit? I bet she did that with your mom too. She probably sent it to Julianne too.
I think we have somebody might want to mute.
I understand.
All right. So, Todd, do we want to open up to any questions on the 3 products, or any other questions on Washington National?
Yeah, Todd's microphone's not working. This is Dina from Senior Insurance Marketing, and I just wanted to thank you, Andy, for taking the time to go over this with us today. And feel free to give us a call anytime here at Senior Insurance Marketing, and we can go over any questions or get you contacted. So if you have any questions, then give us a call, 402-434-7761 or 877-800-3080.